All right, let me see. Got another question here. Just bear with me. I'm just kind of scrolling down the list here. As far as time frames go, again, let me reiterate. You had another question about time frames. Use the Fibonacci on the time frame that you would be setting up for your actual trade, for your entry. Can't put it any more simple than that. Before I do my fibs, do I want to determine the trend on the higher time frame? No, I'm not necessarily concerned with the trend on the higher time frame. I think we kind of addressed that. So, no, again, I want to take my last major move. And if you notice, I did not put the wave on this. And again, you guys know my respect and my appreciation for market cycles. But when it comes to Fibonacci, I want to simply take the last major move, not necessarily within the context of a trend. Okay? Let me go ahead and go to a chart where we have the wave plotted. Okay? Here's where I think a lot of you might be getting a little, I don't want to use the word confused, but don't make it tougher than it has to be. A couple things. Ask yourself, do you need support or resistance? If this, see how this market is heading up higher? If you say to yourself, I need support because I want to confirm where the market might correct so I can buy into a correction. Fantastic. You're going to use the last major moves that will be rallies. And every one of these little moves probably had a Fibonacci that could have helped confirm or identify an alternative corrective support level as the market was moving higher. But what if you need resistance because you've already used, for example, the wave to get long in a swing trade and you want to see where the market's going to top out? What do you need at that point to find resistance? You need a sell-off, don't you? So don't get fixated on the direction of the market because you really want to more focus on whether you need support or whether you need resistance. And in this case, with this uptrending 4-hour Aussie, I would want to identify support for corrective entries where I might want to buy into a pullback, but I'll have to focus on resistance if I want to use Fibonacci for potential profit targets, for potential tops in the market. So always ask yourself, do I need support or resistance? Maybe there's a level for, maybe there's a last major move for both that you could consider. Okay? So don't, the trend, while it is significant in whether you're looking for support or resistance, don't make it a part of your last major move consideration. Okay? Ask yourself, do I need support or resistance? And you can look at it that way. But in my assessment of Fibonacci use, you don't really need to consider the trend in terms of whether you're going to use a support or a last major move that's a rally or a sell-off. It's the determination of whether I need support or resistance. My first inclination would be to find rallies so I could find corrections to support, to confirm swing buys, right? Then after that, my concern would shift to resistance levels for potential profit targets. Is that clear? Does everybody get that? I know it's kind of odd that I'm saying that the trend doesn't matter, and I don't mean it doesn't matter, but I think what matters more is whether you need support or resistance. Does that make sense? I hope that that you guys are understanding where I'm coming from, because I don't want to say the trend isn't important, but I think whether you need support or resistance is more important. All right? Let me see what other questions might be here. And again, let me go back to that cable chart. Don't forget, when you're looking at the last major moves, okay? I know I've mentioned this a bunch of times, but we're still getting some questions on it. Don't forget that if the last major move is a sell-off, okay, like the move from A to B, I cannot exceed the low of B. Otherwise, that would invalidate this last major move. In a situation where I have a move from C to D, in this case it's a rally, okay, again from C to D, I cannot exceed the high of D. In other words, you can't go beyond the 0 point. Okay, if your last major move is if your price action breaks the 0 point of your Fibonacci, it's no longer a valid last major move. So in a rally from C to D, if price action somehow gets up higher through D, this is no longer a valid move. Okay, so finally that brings us to D to E. So it's obvious now, right? This is why D to E is no longer valid. We exceeded the low of E. We broke the zero. This is no longer the last major move because it's no longer the last major sell-off. Okay, so you cannot exceed the high in a rally. You cannot exceed the low in a sell-off. All right? Okay, excellent. That makes sense? Happy to hear it. Excellent. All right, so I think that about wraps up the... And there's some questions about wave counts here, gang, but I've obviously kind of established that I'm no Elliott wave expert, so I will not insult your intelligence with my limited experience with Elliott wave. It's not that it's not a great tool. It is. I just find that Fibonacci gets me the same kind of levels, and I'm just, you know, at some point we all have the tools that we've chosen. You guys know my tools, and I think Fibonacci is actually easier than Elliott wave in my assessment, just my opinion. Okay? All right, so again, what is the point of Fibonacci? Finding support and resistance, like everything else we do in the market. That is the point, okay? It's just another way of finding support and resistance that the market could react to. It could be confirmation for an entry. It could be in a way to identify potential profit targets. Whatever it may be, just like any other reason we want to establish where support and resistance may be, Fibonacci is just another way to do it.